shares a multi-million-dollar loan was just secured by the owners of Destiny USA, how this investment will help its upstate properties.
And hot from Hollywood, Netflix announces a $72 billion deal buying Warner Bros. Film. What this means for the streaming giant.
And Scott Bessent reveals a tariff plan B if the Supreme Court rules against the Trump administration. Hold on to your wallets because Market Shares starts right now.
Good afternoon and welcome into Market Shares. I'm Ben Bascuk.
I'm Riley Underwood. Let's get right into our market update, Ben. And so far, it's been a really good week for investors. We're seeing green across the board, steady rising all week long.
We are. I was kind of hoping for that red and green Christmas colors going into the holiday season, but this is good to see too, especially out of Wall Street. It's all coming after the government finally released a lot of data. We had that pause during the government shutdown. We're seeing cooling inflation. We're seeing spending go up. And we're seeing the NASDAQ, the S&P, and the Dow all affected by that, especially in the tech sector with the NASDAQ seeing those boosts with stocks there.
A lot of investors also may be expecting a rate cut during the meeting next week. That's something they're maybe looking forward to. But right now, with all the holiday shopping going on, everything just seems to be going up and up.
Yeah, especially with inflation numbers being more mild than the Dow originally expected them to be. The kind of perspective has shifted to this weakening labor market and kind of the job sector. So the concern's not so much about consumer spending within these indexes. It's more for the jobs that are taking place within things like the tech sector, especially with the rise in artificial intelligence.
Well, what do you say we take a look at the biggest news of the day, and that's Netflix purchasing Warner Brothers Discovery for about over $80 billion.
With a B.
$80 billion.
That's a lot of money.
That's insane.
It's not the biggest surprise. I mean, Netflix was kind of the front runner in this bidding war with Warner Bros. But we're starting to see Hollywood emerge as this huge asset for GDP in the United States coming out of California. And movie studios in general are facing criticism over this merger because it opens the possibility of less films being produced and less studios in general when we have big mergers and acquisitions coming out of Hollywood.
But also maybe you'd expect it to go up. No, the stock's gone down because the purchase adds a lot of new debt, new leverage to the company. And that's something that maybe they're not so sure about because this isn't just, oh yeah, we get all this more money, we get Warner Brothers. You have to deal with all the assets and all the people. I mean, that's a lot of moving parts.
Yeah, and we see Warner Bros. Shares here kind of rose midweek, especially after this announcement. Netflix sank, like you said, maybe not expected, but it comes with a lot of regulatory risks, especially coming out of the White House. We saw top Trump level officials saying this is heavy skepticism when it comes to this deal. We can probably expect an antitrust lawsuit to come out of the DOJ here in the next couple of weeks, but it kind of goes back to this idea of price signaling that they're losing in the movie industry. They're no longer able to track individual films and franchises, how they're performing with consumers, because now people just sign up for a bundle deal like Netflix, and then if you're me, you get kicked off your household account when you come to college.
I hate that, Ben.
It's the worst,
I don't like that at all.
It is. Well, we're going to move on to our next mover here, which is Alta. Oh, Microsoft, it's my turn, Riley. That's my bad. Yeah. Well, we're back to AI. We always talk about it here on this show. They lowered their AI software sales quota, and it just goes back to investors having these lower expectations when it comes to growth in the AI sector. A lot of Microsoft revenue is tied to OpenAI, and they've now opened their contract with OpenAI, so they're allowed to partner with other services when it comes to cloud services and computing. But the question, again, it's very hard to track who's using AI and where, whether people are spending time on the Gemini app or if they're using it in Gmail, which is not a paid service, or a free AI software like a ChatGPT Model 2. It all depends on where they're using that AI and where the revenue streams are coming from, and it's not something that Microsoft can track right now to give investors numbers. So there's a lot of skepticism over how these numbers are being tracked, especially with this lower quota.
Microsoft not having the best week in the stock market. Who is having a really good week? That's Ulta. I know you jumped the gun a little bit. It's your favorite makeup brand, but yeah, they jumped just under 70 points today. They had a great day, and it's all because they've been improving quarter after quarter after quarter. They just have not dropped at all. In August, if you remember, Target and Ulta kind of split a little bit because Ulta had the stores in-store, kind of store-in-store type thing where you go into Target and then you have an Ulta. Well, they stopped that, and they're going to discontinue it. People really thought that that would be a distractor, and the stock did drop for Ulta one day. The next day, it bounced right back up. It's at the highest amount that it has ever been right now. Ulta is hot. On an earnings call yesterday, the CEO said she's pleased with the Black Friday and Cyber Monday performance and ready for the shopping season. there's a lot of makeup that's being bought right now.
I know. You said it's one of my favorite brands. Maybe I'll get you some face wash here for Christmas. Could really use it. Well, lots of consumers using that discretionary holiday spending in the beauty sector, like we said, with those big names brands like Ulta. But small businesses are starting to sweat with rising costs. Payroll giant ADP's latest monthly report shows 32,000 jobs were lost last month. That's a big drop off from the nearly 50,000 jobs gained during October.
The estimated job losses were overwhelmingly at small businesses, which are classified as having between 1 and 49 employees. They lost an estimated 120,000 jobs in November, while medium and large businesses both added jobs. The full November jobs report is stalled until December 16th, though, as the recent government shutdown impacted agencies' abilities to collect their data.
That data also showing a cooling inflation rate and increased spending. It's that time of year for the holiday shopping spree. Owner of Syracuse staple Destiny USA just secured a new loan package for another upstate location.
Our reporter Mia Carr is live from Destiny Mall with how this loan could help the struggling Pyramid Management Group. Mia?
I'm live at Destiny USA, New York's largest shopping mall, the 10th largest in the country. It's operated by the Pyramid Management Group, which is based right here in Syracuse. Now, Destiny has been present in the news recently for financing issues. Most recently, in October, its foreclosure was delayed until the end of the year. Now, amidst all of this, the Pyramid Group just secured a new 5-year commercial real estate loan for $193 million for the Crossgate Mall in Albany. They also secured a $13.8 million loan for the property close by, the Crossgate Commons. A part of this property is the largest Walmart supercenter in the U.S., a Home Depot, Michaels, Urban Air, TJ Maxx, Planet Fitness, and a Panera Bread. But the company doesn't plan on just stopping at ownership. Stephen Conjolt, the CEO of the Pyramid Group, said in an announcement that in the months ahead, they anticipate announcing additional retail, dining, and entertainment offerings that will further strengthen the property's position in the region. Now, Pyramid describes itself as one of the largest privately held shopping center developers in the Northeast, with 3,000 people employed by Pyramid and its tenants. Crossgates Mall is at the top of the company's projects on Pyramid's website.
Yeah, we've all seen the state that Destiny is in. Lots of stores actually leaving the mall in the past couple of months. Is this really the right time for a deal like this?
Yes, so Destiny USA has had several financing issues. Like I mentioned, October they delayed the foreclosure, but this really all started in June 2024 when they missed a deadline to pay off a $300 million loan, but debt holders have yet to take over, which is why there has been this continuous risk of foreclosure. So it definitely is an interesting time with this new loan for a different mall, given that they've been having struggles with Destiny already.
So talking about the ownership group, what's Pyramid's presence in the whole retail sphere?
You know, as I said, Pyramid describes itself as one of the biggest retail developers in the Northeast. They've had several malls that they've owned that have actually recently shut down. In Massachusetts, they had the Hampshire Mall, which shut down in summer 2024. And in West Nyack, New York, they lost the Palisades Center in September 2024. And this is all happening on top of issues with Destiny. So they are this big developer of malls in the Northeast, but it's kind of a difficult time to be owning malls, given that there is so much competition with retailers like Amazon. But only time will really tell whether this investment marks a turning point for Pyramid or if it deepens their financial challenges.
All right, thank you so much. Well, coming up on Market Shares, the verdict is in. Who President Trump's frontrunner for the next Federal Reserve chair is when we return. Welcome back to Market Shares. Well, Treasury Secretary Scott Bessent says that the Trump administration will still be able to implement its tariff agenda regardless of the Supreme Court outcome. Repeating claims he made prior to the court hearing, he cited several sections of the 1962 Trade Act, which is up here on your screen, one including Section 122, which allows tariff power for up to 150 days, and Section 232, which allows tariffs on imports that threaten U.S. security. He also cited the International Emergency Economic Powers Act as providing broad tariff authority, although that is currently under scrutiny by the Supreme Court.
Some companies taking civil action over those tariffs. Costco is taking the Trump administration to court. The wholesaler is suing to get a full refund on the tariffs it paid if the Supreme Court finds the tariffs unlawful. Costco joins a growing list of major companies to have filed lawsuits regarding the administration's tariffs, including Revlon, Kawasaki, and Bumblebee. Costco standing out by doubling down on its DEI policies, while other companies abandoned them in the face of White House pressure. Staying in D.C., Federal Reserve Chair Jerome Powell's 10-year term will end in May of next year, and President Trump says his pick is in. Market Shares analyst Ethan Kraut joins us with who it may be and what those impacts are. Ethan?
Yeah, thanks, Ben. Back in his first term, President Trump picked Powell as the Fed chair, but that hasn't stopped Trump from attacking Powell for his unwillingness to lower interest rates. Now with Powell's term coming to an end, Trump will get to pick who he wants to lead U.S. monetary policy for the next decade. Trump tasked Treasury Secretary Scott Bessent to search for the next chair, who produced a 5-person shortlist for the role. The list includes Fed board member Michelle Bowman, BlackRock Chief Investment Officer Rick Ryder, Fed Governor Christopher Waller, and former Fed board member Kevin Warsh. However, all indications point to Kevin Hassett, the director of the National Economic Council, to be the pick, with Trump even referring to him in a Truth Social post as a, quote, potential Fed chair. Hassett has separated himself from the pack through his loyalty to Trump, making routine appearances on television defending Trump's economic policies. Now, sorry for the technical issues there. Now, not all investors are on board with the potential Hassett pick. In particular, bond investors have warned Hassett's willingness to impose some of Trump's economic policy wishes, specifically with interest rates. There are also worries about whether Hassett's priorities are. The Financial Times has reported that when Hassett met with the Treasury Borrowing Advisory Committee, he was more focused on Trump policies such as Mexican drug cartels rather than the markets. A White House spokesperson said in response, quote, "The president will continue to nominate the most qualified individuals to the federal government, and until an announcement is made by him, any discussion about potential nominations is pointless."
Now, Ethan, a lot of people really don't realize how much power the Fed chair actually has. I mean, setting those interest rates and really kind of sets the tone for the economy as a whole. Can you expand on just why this matters so much?
Yeah, so the Fed chair technically doesn't have any more power than anyone else on the Fed board, as they all only have one vote, but he is basically the spokesperson and has a lot of power with just his words on how what he says can impact what the markets are doing. He has the ability to move and start different discussions about economic and monetary policies, so he has a lot of power over what he can do with that.
Right, you mentioned the power really coming from the bully pulpit and what they say to the media. This new Fed chair is going to have to accomplish a lot of things the Trump administration wants him to. Cutting interest rates while also proving that the economy is going well, while also balancing those high-stake trade deals between Canada and Mexico. Somewhat of an expected pick, very qualified. I mean, with a PhD, working in Washington for a long time. But time will tell whether this is another Powell situation where the president has beef with his own Fed chair that Bessent is set to pick.
Yeah, it's going to be interesting to see how much Hassett is going to do. He's shown a very much willingness to do basically what Trump has wanted him to do. He goes on TV and says how these tariffs have been really great, and then also says that inflation isn't an issue, when Powell, who runs the Fed right now, said that we wanted to cut interest rates, but these Trump tariffs kept us from doing so since they raised inflation. So it's going to be really interesting to see how Hassett balances Trump in one hand and U.S. monetary power in another.
I think the tariffs are really interesting because Powell is kind of anti-tariff and Hassett is more pro-tariff. So is this really the driving reason why this is maybe the selection here?
Yeah, I think that's a major point. I think the tariffs also are connected with inflation, which are connected to the interest rates, which is basically the biggest job for the Fed, which is going to be a major part in Powell's tenure term if he is in fact picked. Hassett rather said that he has a very strong willingness, and if he was the Fed chair right now, he would have already dropped interest rates, something that Trump has said that he likes in Hassett. So that is something that Hassett appears to want to do when he gets the job.
We know something Trump also likes is loyalty. We saw that with his cabinet picks. We saw it with other appointments throughout his administration, and this is a big one, Riley, like you said. I mean, other than the Supreme Court justices, this is a huge pick because it does drive monetary policy for the entire United States. So much of Trump's plan revolves around monetary policy, lowering prices, guarding inflation, which is why he pushed for those cuts. But it's really interesting because he has other policies that are going to be very hard to accomplish, like those $2,000 dividend tariff checks that he's proposed to give out to people kind of as a way to sell this whole idea about the tariffs and putting money into people's pockets. Last time we saw those checks go out, that was during the pandemic, and we saw inflation rise up afterwards. It really is walking a fine line between how do we affect interest rates versus how does that impact inflation. It's something we're going to keep a close eye on going forward because this pick is not yet finalized, but is in the process of doing so. So we will have all the updates there. But Ethan, thank you so much for joining us at the desk. Well, coming up, a look into the money in college football's coaching carousel. Stay with us. Welcome back to Market Shares. After a rough few years, Boeing is cleared for takeoff. Its CFO announced the company will deliver significantly more 737 and 787 jets next year, driving what officials expect to be the first positive free cash flow results since 2023. The higher forecast sent Boeing shares up about 10% on the week. Boeing CEO says the company expects cash margins will get a, quote, pretty significant boost through 2030, due to the higher productivity. The aviation giant is seeing an upward trend after a period of increased scrutiny following the blowout of a door plug on a flight back in January of 2024. Riley, did you see that video?
I saw.
Crazy video.
I don't want to be on that flight.
And it kind of raised concerns in the aviation industry in general, all these companies having flight issues. We just saw a bunch of cuts to air traffic controllers during this government shutdown. People are nervous to go to the airports, and that's going to impact holiday travel, which is going to affect spending and lots of other facets too.
And every time I see, it seems like I travel, I'm getting delayed.
You travel a lot.
Sometimes
you're not here. A lot of times you're not here because you're taking those weekend trips.
Well, sports merchandising giant Fanatics is breaking new ground. The company just launched Fanatics Market, a prediction-based platform that is now live in 24 states, including states like California, Texas, Florida. through a partnership with Crypto.com. The platform will allow people to trade in events in sports, finance, and culture. This comes as prediction markets like Polymarket and Kalshi have exploded in popularity on the back of legalized sports betting. The combined trading volume reached nearly $28 billion through October. Ben, it just seems like you can put money on anything now. It seems like it's getting a little ridiculous, to be honest.
You really can't. I saw people, we just talked about it before the commercial break there, people betting on the next head of the Fed. So
I mean, you got to really do your research on that.
It says prediction markets were saying 70% chance, so we'll have to see if that goes through.
Yeah. I know who Ethan's putting the money on.
I know he is. Well, it has been a wild week in college football, but most of the drama comes from off the field. Ever since name, image, and likeness deals for athletes became legal in 2021, money in the sport changed. Now the focus is on the coaches, and the drama is at an all-time high. Hudson Ridley is here to explain. Hudson?
Thank you very much, Ben. That's right. The greatest soap opera on right now has been this year's college coaching carousel. In this cycle, there have been 23 openings for FBS head coaching positions. That's the most in recent memory. And this all has major impacts on local economies and state budgets. Let me walk you through this drama right here. This all started with LSU firing its head coach Brian Kelly back in October, a move that forced the school to pay $54 million of what is considered to be public money. So what do the Tigers do? Well, they go and poach Ole Miss head coach Lane Kiffin for $91 million. That's the fifth poorest state in the nation, spending nearly $150 million over the course of 1 week on 2 college coaches. Of course, this creates a domino effect all on November 30th. Florida, who wanted Kiffin badly, pivoted to Tulane head coach John Summerall for $45 million. Auburn hired Florida head man Alex Galesh for the same price. This left teams struggling, like Arkansas, with fewer options. That day, Razorback athletic director Hunter Yurachek tweeted out an image of red smoke at the stadium, just like the white smoke for the papal elections. Arkansas hired Memphis head coach Ryan Silverfield, not a name that fans wanted to see. One responded to Yurachek's smoke tweet with this right here. Fans were already distraught before their team's $33 million investment even set foot in the state. The truth is there just aren't enough coaches to go around. 13 power conference programs had to fill openings with a pool of candidates that, by most years' standards, would be small. Penn State, who was a national semifinalist last year, fired head coach James Franklin mid-season, and as time has gone on, the Nittany Lions have begun to lose out on surefire coaching hires. Days ago, they began targeting BYU head coach Kalani Sitake. That prompted BYU booster and Crumble Cookie CEO Jason McGowan to tweet, "Some people are not replaceable. Sounds like it's time for me to get off the sidelines and get to work." The Cougars ponied up enough money to keep Sitake, and when it was all said and done, BYU fans sent Penn State athletic director Pat Kraft a box of Crumble cookies. By the way, former head coach of Penn State James Franklin took all the money and NIL deals and recruits with him, so that left Penn State with just 2 players in this cycle and a head coach that they signed 90 minutes ago, sandwiching a program that generates $113 million a year between programs like South Dakota State and Prairie View A&M. So why all the chaos? Well, the truth is collegiate athletic departments have run out of patience. In June, a federal judge ruled that the schools can now pay players directly with a budget of $20 million a year, all while programs like Ohio State are now valued by the Athletic at $2 billion. There's more to be made and more to be lost than ever before. And we're seeing it all play out in this year's college coaching carousel, guys. This has been something else.
Very big. Coming off a good week for Ohio State. But how does this affect smaller schools that aren't as big as OSU?
Well, part of it is also the size of now the college football playoff. There are 12 teams that get added to the college football playoff every year, meaning there are more spots than ever. And small schools have the feeling that they can make it. Just last week, a small school, Coastal Carolina, fired its head coach after 6 wins, which is usually a season that Coastal Carolina would accept. But now, all of a sudden, the money has changed and people want more and more. Greed has gone up. Small schools are going to get caught in the mix with contracts they cannot afford, and it's really going to hammer some of the smaller schools that don't generate the revenue of an Ohio State or a Penn State.
Hey, well, don't disrespect the Chanticleers. I mean, that's a program of excellence right there.
They've got a blue turf. I do like the blue turf.
I like the blue turf. But, you know, something that's interesting, you talk about a guy like James Franklin getting fired earlier in the season. I mean, this is a really successful coach. I mean, they were really that tired of getting 10 and 11 wins each season. It just didn't seem like it was enough. I mean, most programs, that would be, he'd be an all-timer. They'd be a Hall of Famer. But they kick the guy to the curb. He goes to Virginia Tech. But it seems like now it's championship or bust every single year, especially with these big programs like Penn State. If they're not going to the playoffs, it's unacceptable.
There are around 34 programs, I'd say, right now that are expecting that, hey, we can win a national championship if we put enough money in. I don't see that, right? I really don't. But all these schools think if you put enough money, like Texas Tech is starting to put enough money into their program through oil. Larry Ellison, the CEO of Oracle, is now piling money into Michigan to try to have them win games. Nike and their founder, Phil Knight, are trying to do the same with Oregon. So everything combined money-wise is making it really tough to compete if you're one of those 34 schools that don't believe they can win a national championship. And the pressure is dialed up even more now for those who can.
But does it really come down to the bottom line, to the money? I mean, can money replace talent when it comes to these coaches?
It really depends. That's a big issue. But you can hire away coaches from some of these smaller programs if you have enough money. So all of a sudden, you give a coach 2 years of a leash, 3 years of a leash, and then you're taking, UCLA just got Bob Chesney, who's the head coach at James Madison University. Just stole him away because they can and they have enough money to do so. These smaller schools won't compete. So in the end, it really does come down to the money because also those schools can afford to pay those $20 million a year and still be fine.
All right, thank you so much, Hudson. We were talking about it earlier. Man, that's some big Matt Campbell news.
We
didn't think he was going to leave the Cyclones.
New head coach at Penn State. Very interesting stuff.
We'll see. New head coach at Kansas State, too. Shout out Colin Klein. Coming up on Market Shares, holiday shopping turnout reaches its highest recorded level. What caused the boom? We'll talk about it after the break.
Welcome back to Market Shares. An estimated 203 million people shopped during the 5-day stretch from Thanksgiving through Cyber Monday. This is the largest turnout since the National Retail Federation began tracking back in 2017. Last year's turnout was around 197 million.
Retailers and economists are closely watching spending during this peak season. While consumer sentiment has tumbled, retail sales data remains solid. The NRF anticipates that holiday spending will hit a record of between $1.1 trillion and $1.2 trillion. That will be the first time the total tops $1 trillion. That's a lot of money, Ben.
A lot of money.
Did you contribute to it?
I did
on Black
contribute to it. I got some new sweatpants. I got a new speaker. I know you got some face wash, some stuff from Ulta. So, you know, you got to shop around in all the different industries. But yeah, I mean, consumer spending going up. We talked about that with cooling inflation. People are spending more money. It's a big holiday push this time of year, and companies like to see it. It keeps those markets in the green at the top of the show.
Something though, I mean, spending keeps going up, but really it's not like it used to. You used to see people people getting trampled and people getting jumped for a TV on Black Friday. You really don't see that anymore, but it's also, the online shopping is going up. And the numbers don't lie. They keep going up. It doesn't matter.
You don't see it anymore. Maybe it's a thing from the movies. Well, for the last time this semester, that's all the time we have for you on this episode of Market Shares. Be sure to follow us on Instagram at CitrusTV News and like us on Facebook. I'm Ben Bascuk.
And I'm Riley Underwood. Have a great night and happy holidays, Syracuse.